Yo, Increase team, what's going on? It is March 3rd, 2021. We're going to do a little recap. We'll look at all of the win picks that were recently posted at the beginning of the month. So, first one is Root. So, we're looking at it right now. This is the 10-year weekly. That is going to be my default chart for all of my chart reads. What I'm looking at for this one is I'm seeing that it first came out, moved lower like a typical IPO, and it found a little bit of ground here in this $14 area. So then it started to move up again, sold off, made a low of $12.85, and now is back in this $14 area with a recent close price of $13.55. That's not a bad entry, especially looking at this part here where it hit. What is this? This is a low of $13.81, and then this low was $13.57. So those two lows right there are right around this same area where the price is currently at. And as you can see, there's a green candle starting to form since it has made that low. That's no coincidence. This is looking to be some type of support, and that's why this one has reached my attention to put on the win picks. So that is Root. If you're not familiar with Root, it is a car insurance play. Insurance in general should always be a good pick because they're going to get paid. And I think this one will continue to grow. It will rival the Progressives, the Allstates, all of that stuff. I think that this one will be popular amongst millennials because it's just an app. That's all it is. It's an app. It allows you to be profiled just on your driving. A lot of the insurance metrics out there are based on the area you live, all of that, those type of statistics. This is purely based on how you drive, and because of that, there's a potential for some significant savings. I think that's going to appeal, and eventually I think this stock will continue to go up. So that is Root. Let's take a look at the next one that I have on the list. That is ticker UL. That is Unilever. This is the very first ADR stock that I myself personally have put on the win picks. I'm not really a fan of ADRs, and that is because I don't like the exposure to the foreign currency, and that's just my personal preference. However, looking at Unilever, I decided to dismiss that because this product itself is everywhere. I want you to go to your bathroom and I want you to turn around pretty much any bottle of shampoo. I want you to pick up any bar of soap, anything that's going to have cosmetics or health and beauty or whatever. Chances are you have one of these products. Unilever is a huge brand worldwide, and this is why I feel like this is a strong pick. So looking at things on the chart, we have our 10-year weekly, and you can see it's a very nice trend there. Beautiful thing. Simply reading the chart from left to right, all you want to do is look at the left, see where that price is, look at the right, see where that price is, and if the right is higher than the left, you've got a nice trend going higher. I've taught my daughters that. They know how to read a chart. That's all you need to do to read a chart, okay? There are obviously more things you can learn, but as long as you can understand that basic, you got something to build on. Unilever, 28.45, you can see is the low here 10 years ago. Now we're at 53.26. So the stock has essentially doubled in the last 10 years. And you can see a lot of green marks down here. That is the dividend. I love dividends, and you'll find that on the win picks, a lot of what I put on there will have a dividend because I love dividends. As far as the stock price goes, last close price was 53.26. You see the 52-week high, 64.84. So as far as support goes, I'm looking at this area as being support because I see once that the price hit in this $50 range. This is a second time it hit in this $50 range. Here's a third time it hit in this $50 range. This was the pandemic. Don't let that shake you out. It got back into that range and took off again. And lo and behold, here we are again in this $50 range. I think this is a very good entry point for something like this. I think that this has the potential to go higher. If I pull up my monthly chart, you can see the phenomenal performance of this stock, how it continued to go higher. I think that this will continue to trend higher. As you can see on my other moving averages, hit here, it moved to a brand new high. Hit around that same area, it started to move back to this high, and now we're back in this area. We're trending higher. I say that because I think the stock has the potential to continue to go higher. So I think around this price range of 50 and getting the dividend, which is currently at about 48 cents. Let me see here. No, I'm sorry. It recently went up. It's at 51 cents. That's decent. I mean, it's not huge, but it's definitely something of value. So that's Unilever. Let's check out the next one. I have Tap. Everybody's familiar with this brand. Molson Coors. Very popular beer for your beer drinkers. I'm not into it, but I understand that that's something that that people enjoy. As far as the stock is concerned, if you drink it, I definitely recommend that you should own the stock. I'm going to say that for a lot of products that you may purchase. If you purchase it, you should likely purchase the stock. I'm not saying you need to go gangbusters on it, but if you are a consumer, you should also be an investor. Make sure that you go out and get at least one share of whatever product that you love. That's it. Just one share. Don't go gangbusters, but if you do want to invest more and you really like the company, then that at least whet your appetite and you can go ahead and get 2 shares. 2 turns to 4, 4 turns to 8. You get my drift. Back to Tap. I like this play because you can see, as far as the 10 years are concerned, we are back around where it was 10 years ago. And you say, that's silly. All right, why would I pick something that's essentially flat from 10 years ago? Well, I say that because the last time it was in that area, you can see how the price continued to ascend higher. The high is 112.19. We recently started to get back into this area where it broke out from. What I anticipate to happen is if it gets above this level again, which is around that $50 area, that it would likely start to try to trend higher again. And you can make that appreciation along with the possibility of a dividend returning. Now, as you can see, the dividend went away, and that was likely a reaction from the board to take it away because of COVID. And they might have done that for very good reason, to save their company. And that's all right. I think that over time, the dividend will likely return. As you can see, historically, it has been there for years. And I think that the board will likely vote to bring that back. Or, at the very least, a special dividend once things come back into normal play. So, Tap is currently at $44.97 was the recent close price. I think this has the potential to continue to climb higher, and I think the dividend will return in the near future. That is TAP. Let's look at the next play, which is ticker HBI. Very popular brand. Everyone recognizes it. It's Hanes. This is a no-brainer, right? Because everybody knows about Hanes. Everyone's probably got the underwear on right now, t-shirt. And if you ain't got it on, somebody else does. Somebody else you know has it on, and so forth. This ain't going anywhere. And it recently started to make a run to some 52-week highs. I think it's very cheap considering what this brand is. And the recent close price is $18.29. You can see 10 years ago, it was around the single digit area, $5-6, whatever. Started to ascend, made a run, and got tapped out around $34.80 as the high. So we're about half of that right now, right? So we had a run. It moved and it got pushed lower for whatever reasons. And now we're starting to make a climb back higher. We're back above all the moving averages. I think it'll start to level out around this area, and we'll start to at least stabilize and start to move higher. And then ding, 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 you see, once again, we have a dividend. That dividend is not shabby. It's 15 cents. So for every share you own, you get 15 cents. Now, 15 cents may seem measly to you, but let all that add up. Especially if you own, let's just say 1,000 shares, which is around a little less than $2,000, right? If you own 1,000 shares and you get 15 cents, that's $150, right? That's every quarter you get $150. It's not bad. That's $600 on a year. And I think a lot of Americans can say they can, scrounge up $2,000 over the course of a year in order to get themselves that. Go get yourself some money. Like I said, if you own the product, you should own the stock. Get you a share of it, and let's go. That is Hanes. Next pick, we're going to check out AFL. You're going to recognize this one too. AFLAC. AFLAC. The duck. The annoying duck you see. Well, he doesn't speak anymore because Gilbert doesn't do the voice anymore. But everyone knows this brand. It's also insurance, right? This is the company that, gives you cash when you need it. And insurance is obviously not going anywhere anytime soon. I like this one because it reacted from the pandemic pretty sharply. Went down, went on a discount sale. Probably won't see that price for a very long time. If you got it in there, kudos to you. Started to trade around there and then it broke out. Okay. We're in the stages where I feel like this price can continue to move to test its old highs and move higher. Let's go ahead and look at what that monthly chart looks like, because this is what a lot of my reads are based on. I want to focus your attention on this MACD here. Okay. What I use my MACD for is to gauge when sellers and buyers exchange. All right. This crossover here that you see is also coinciding with this move higher. This preceded the move higher in the breakout that it had. Once again, we have the same scenario where the MACD is at this low. And does that look familiar to you? Oh my goodness. What is this? Now we have the similar move for a breakout that can happen and the stock can move higher. I think this is a very good play. I wish I would have caught it a little earlier at the 35 range to tell you, but hey, it's never too late. So the current close price is $48.64. It's not terrible, The high is 57.18. So we're sitting about, roughly $10, just rough math, $10 away from what the current high is. It's not too bad. And what I would say is if you want to start a position there, I would likely get in small around here. And if it drops, then you can do your little average down. But don't be surprised if this does end up taking off to try to get back to 55 quickly. So that is AFLAC. Let me move my chart back to the 10. Next ticker, GPK. Graphic Packaging Holding. I think this is a play on the market itself as far as transport goes, because packages are going to continue to happen. And I think this is a very good move, on a bullish move for, like I said, transports to continue. I like this play because the stock price is showing that it has some potential to finally get out of this range that it has played for, let's see, it's 1, 2, 3, 4, 5, 6 years, right? So for the past 6 years, it's been in between this range. Now, what you see is that the price has recently climbed out of that range. And for the first time, what you see is it is trying to stay above this range. I think that is a very good signal that it is busted higher, came back down to test out its old range height, and now it is starting to defend it. So, simple chart read, we have a range from between, let's say, roughly 16 to roughly 10, 11, okay? For the sake of math, we'll just do 10 to 16. So it's a $6 range, okay? The rough chart read on this is simply thinking that this will move about $6 higher from 16, which that will put you at around $22. That's not a big price appreciation, I'll give you that. However, I do like his consistency. If this is something that you would like to hold just to make sure that you don't lose a whole bunch of money, because the biggest thing you can do is defend your profit. I think this is a very nice play because it gives you a dividend. And I think that yield will grow because dividends tend to grow. And I think that's a very solid play on the transport industry. So that is GPK. And the last one that we have here is ticker NWL. And you'll recognize this product too. This is Rubbermaid. A lot of you have this in your cabinet somewhere. Either in your top cabinet, bottom cabinet, wherever you store it at. It's there. And if you don't, then you know your grandmama got it, your auntie got it, your cousin got it, one of your friends got it, somebody got it. Rubbermaid. This is another play on, if you have it, you should own the stock. I think this is a wonderful play because you can see historically in this range, it started to move higher. And if this is going to be in a cycle, we're back in this same range again. This low range between, let's see, what's that, 20 to 10. So around roughly 20 and roughly 10. We're in that same range where it broke out earlier from the pandemic. And now we're starting to move higher. Current close price is $24.05. I still think that's an okay entry as well. And I think this price is going to continue to appreciate. The dividend's nice too. Dividend's at 23 cents. So the way you calculate a dividend's yield is you take that dividend price, that's 23 cents, all right? And a dividend is done quarterly. So that is going to be 4 times a year. So that's 23 times 4. Simple math, 23 plus 2 is 46. 46 times 2 is 92. So that's 92 cents a year is what you get. Then to get the yield, all you do is divide 92 cents by the current stock price. That's obviously always going to change because the price changes. So the lower the price, the better the yield. 24 isn't the lowest price, but it's the price you got right now. If you want to get a better yield, then obviously you buy the stock price when it gets lower. So those are the picks that I have. That's Root. That is Unilever. That's Molson Coors, Hanes, AFLAC, Graphic Packaging, and Newell Brands, which is Rubbermaid. Those are my picks for the win picks for March. We're going to catch you in April. And don't forget, always check me out, Stocks and Bars podcast. And every single week, I do the weekly chart analysis on the S&P and the Russell. Any questions, shoot them at me. That's at Wincrease Team, and that's going to be on any social media you got. Look for the podcast on any podcast platform, and we'll get with you later. All right, peace.